Hey, thanks for tuning into Harvesting Income. This is the channel where you learn how to make your income and grow your income. In this one, I'm going to talk about my own portfolio, which is a margin account, and it has a combination of income plus growth strategies. So it's going to be pretty interesting because this is the first time that I'm going to reveal or talk about my portfolio on certain details. And wait and stay tuned till the end because I'm going to discuss specific strategies in my portfolio. And this is the first test or an experiment, you know, to share my actual practical portfolio moves. So I'm sure sharing one of my portfolios. And before I share that, I wanted to discuss my strategies, the reason why I am, investing in certain funds and what is the thought process and why I selected those funds or what I'm trying to achieve. Disclaimer, this is not investment advice and please do not make any decisions based on this because this data is based on the performance of my funds in July 2026. So by the time you see this video, things would have changed dramatically. Okay, first let me cover the key points. This is my margin account where I try to seek income, income from distributions from the covered call funds and other types of funds. Plus, I also seek some amount of growth. Some funds give significant growth, some provide moderate or no growth at all. So, um, all of these funds have some income component. So, the reason why I started is to have a steady source of income plus also some growth opportunity. And when is difficult to say because I was working on this since the last 3 months, like since May onwards. But the actual research or work goes back, even the end of last year when I was trying to fine tune strategies. So what you're seeing right now is not what I started. How I started was completely different. Now we are seeing the refined strategies or improvised why or improvised goals. So improvised goal is to achieve moderate to high income. I cannot put a number to it, but I'm just saying moderate to high income combined with moderate to high growth. And of course, it can be sometimes low growth as well. Depends on the performance of the fund. And each will fund will have a different income growth combo. Most of the funds or all of the funds are, having some income, as a part of the distribution. Uh, the growth is where it's going to vary. So every fund will have an income growth combo. And that makes it very interesting, right? The hybrid combination of both. So when growth stocks do well, I would benefit from that. And when income stocks do well, I'm going to benefit. And similarly, when the funds generate income from covered calls, I'm going to benefit. Whether they generate covered call income from growth stocks, income stocks, value stocks, doesn't matter. Uh, each fund is going to capture some portion of that income. Now, the last part is I'm also using sector selection strategy and covered call strategy, within the sectors. This is for the US market. So I will explain when I come to those funds. So I'm just giving a summary of the Canadian and US strategy that I'm following. In Canada, I'm looking at semi-monthly zero DT ETFs, and there would be one covered call ETF also, which pays semi-monthly, and then monthly covered call ETFs. So this can change a little bit. I'm just giving you the broad points, like some nuances or tactical moves may change some of these parameters. Again, in US, I have weekly payers, leveraged ETFs, uh, especially the funds from Roundhill Investments, and I'm also using SPDR sector premium funds. So what these do is these are the funds which are part of the S&P 500, but each fund focuses on one sector. So for example, XLK is a technology sector fund. So what I'm doing here is I'm investing in not the sector fund, but the sector premium fund, which uses covered call on the sector ETFs. So it's pretty interesting. We have seen covered call on index ETF or index itself, like for example, covered call on the S&P 500. But here we are talking about covered call on the S&P technology index or technology ETF. Okay, so this is the broad idea. Now let me quickly go to the list of tickers I have, and I'll explain that now. Now I have listed some funds here, and you see all this brown shading like brown or amber color. These are in the Canadian market. SD, which is the Hamilton S&P 500 zero DTE fund, and they pay semi-monthly. And this is basically for income plus full market exposure, and they pay semi-monthly, like twice a month. And CMCL is the all-in-one commodities enhanced commodities um, leverage enhanced commodity fund, and again it's semi-monthly. It provides income plus significant market exposure. Market meaning the commodities exposure. And HHI, as you know, is the Hamilton high income shares fund, and they pay monthly distributions, and income plus moderate growth is the growth strategy. Now these are the Canadian funds. Now with respect to US funds, I have put into four categories. The first three are more or less similar. Like the first one is the gold miners weekly pay ETF from Brownhill, and it provides income plus moderate growth, weekly payout. So it's a great option. Like I recently did one video on GDXW, and I've done a more deep dive analysis. You can look at that video when you have a chance. And why ETH is basically US weekly income plus moderate growth, strategy, because I am investing in the Ethereum, and this fund captures both growth and income. I'm using the word moderate because it can be more or less. So it depends on the performance of the Ethereum cryptocurrency. So that's why ETH. And then we have RDTE, which is the Russell 2000 weekly pay ETF, and it follows the Russell 2000 and generates the weekly income. So income plus moderate growth again. Now, when it comes to sector premium ETFs, I have not listed the ETFs here. Like I will show you when I open the portfolio. So all these are from different, tickers like XLK, XLF, XLI, which is industrial, XLU, utilities, and so on and so forth. Okay, so now I'm going to show you more details, but before that, SPDR sector premium ETFs. This will be multiple ETFs, like it would be 4 ETFs, 5 ETFs at a time, and they pay monthly income because they do the covered calls on the sector funds. Uh, Sorry, the S&P sector funds, because these are not merely sector funds. These are basically sectors which are part of the S&P 500 index. So that's the nuance you need to understand here. Okay, now I'm going to cover one more thing about the payouts schedule briefly before I jump into the portfolio. So bear with me because this is also a very key strategy that I did a lot of trial and error over the last few months, and then you know because if I'm going to do a video on this, I need to be clear about why, and you know when I'm doing things. So I've just marked the payout dates for each ETF. I'm going to hide this goal or strategy just so that it'll be easier for you to understand what I'm saying. So I hope you can see the columns F, G, and H, week 1, week 2, week 3, week 4, this part. So I'm going to zoom it a little bit. Yeah. So with respect to SD, the Hamilton Fund, they pay semi-monthly, twice a month. Okay. So they pay sometimes around the 5th, 6th, sometimes 8th. It all depends. So mostly the payout comes on the week one or probably on the week two. It's like a borderline between end of week one and week two. So somewhere here between 1 and 2 weeks, end of week one and starting of week two, around that time, you get the first payout. The second payout comes after week three, probably the fourth week, like end of week three or fourth week. Like it's very difficult to you know pinpoint a date. So that the payout varies depending on the timing of how they distribute it. So recently they did 10th and 21st of August. But in July it was different. Like every month it changes. Similarly, if you look at CMCL, which is the Commodities All-in-One Enhanced Fund, here they do the payment at Global X. They also do a similar kind of schedule. Like one pays end of week one and another one end of week three, roughly. So these payments can vary. The reason I picked these two is because not only are these funds paying semi-monthly, better frequency, but they also provide me good appreciation potential. I think I have hidden that column. Let me make it visible. So because they provide me full market exposure or potential, so that's why I you know choose these two funds for the Canadian market. Because previously I had the HHIS, which had been providing me good monthly income plus appreciation. But I wanted something that is going to give me more appreciation plus also a decent amount of income. And these two funds have met that criteria. SDA because it isn't focused on the S&P 500 stocks or similar kind of stocks, blue chip stocks, not exactly S&P 500, but something like that. CMCL is a great option because it provides an all-in-one exposure to the commodities market, especially precious metals, base metals, energy, and other materials that are important for the industrial and economic reasons. So that's the strategy. So with that, I'm just going to hide this column just to give more space. So yeah, so that's why I just put in my notes that the payment can be between week one and two, and the second payment can be between week three and four. Okay, with that, next go to the HHIS. HHIS has a portfolio of blue chip stocks and the recent stocks in the tech industry and all these SpaceX strategy, Circle, and so on and so forth. Um, some of them are really good blue chip companies they have, but some of them are recent, uh, flavor of the season stocks and theme stocks. So, I take it with a grain of salt because some of the stock selection is not to my liking. But in any case, this fund is providing me decent, income. Uh, Not good in terms of growth, no growth at all, sometimes degrowth. So this fund is paying monthly, um, distributions, and they pay around the first week of the month. So yeah, some funds pay weekly, some fund pay monthly. It varies. But the HHIS pays monthly, and the date can vary. It's around the fifth of the month. It could be fifth, sixth, seventh, like depending on the how they pay every month. Okay, now moving on to the US market. The three funds here are similar: GDXW, YETH, RDTE. So GDXW basically, I already said it pays weekly, and so what happens is they pay every Tuesday. Like, so even though I have already explained this, I'll not repeat, but the payment comes on Tuesday, and for Ethereum YETH it comes on Thursday, and for Russell 2000 RDTE, sorry, it comes on Friday. So basically, in the same week, I am going to get, you know, Tuesday I'm going to get paid by the gold miners. Thursday I'm going to get paid by Ethereum, and Friday I'm going to get paid by the Russell 2000 fund. So this happens every week, and every Tuesday, every Thursday, every Friday I get paid. That's wonderful, right? Even in 1 week, I get paid three times from these three different funds. The reason I have this is it's not going to boost your income three times because you're getting 3 weeks of payment. It's just that instead of the monthly, you're getting it split into weekly payments. Instead of one big monthly payment, you're getting it split into four parts. So that's how you need to understand it. Like it's not like they're paying you, four times. Like it's just the same payment, split into parts. Okay, with that, let's go to the sector ETF. This you will understand when I show the portfolio. So I'm not going to explain anything here. They pay monthly on the 5th. So yeah, it comes on the first week. So if you observe this entire dividend schedule or calendar, what I understand is in the first week of the month, most of the CDFs are giving payouts. So in the first week of the month, you have a good amount of cash. But in as you go to the subsequent weeks, there's not much of payments except for these weekly payers who pay every week. You don't have much payments. That's precisely the reason why I chose SD and CMCL, which are paying in week three. So this helps me, get some cash flows in after the second or third week, or probably end of the month. So when I have that cash, probably I can reinvest, reallocate, or plan for things, and also manage my margin. Even if I'm not reinvesting this cash, I would let it stay in the account so that it keeps paying my margin. Similarly, all these weekly distributions are solely meant for managing the account, paying the margins, keeping the income wheel running smoothly. So that's the whole idea behind this distribution and income strategy. Okay, enough of ranting about this. I'll quickly go into my portfolio as I promised. Okay, so this is my sheet income breakdown for July 2026. This starts from July 1, 2026 to July 31, 2026. All the distributions. I'm not going to reveal how much I purchased, sold, and all that. That's too complicated. Yeah, I have been building this for the last 3 months. So it has reached a stage where it is stabilized. Like that's something I can say for sure. Okay, now coming to the main point, like you know all these funds, so I will quickly show you the Canadian part first, and then I'll show you the US part, uh, because the Canadian part is much easier to understand. So in Canada, I have the CMCL, HHIS, and I have the SD. Okay, CMCL and SD was added recently, so the numbers may not be that great. Yeah. So in July, I have these three funds. CMCL is the Commodities Global X All-in-One Fund. HHIS the High Income Shares from Harvest. SD is the Zero DD Fund from the Hamilton. Yeah, I'm getting some error here. We'll figure it out later. So if you look at this performance in July, I made like around $7 from CMCL, 6.96. HHIS 11.88 and SD 5.55, a total about $24.39. If you observe here, you can see that SD I got the 22nd dividend. I didn't get the one in the early part of July because I bought SD somewhere middle of July. So that's when I started my position in SD. So that's why you see only the July 22nd distribution. Whereas if you look at CMCL, I have the July 8 and July 22. You can see a clear jump, like almost double, because I increased my quantity of exposure in CMCL because its performance was really good and I could get it at a slightly lower price, which is risky, but it's still worth because I know the risk can be managed. So we have covered CMCL, we have covered HHIS, and we have covered SD. Okay, let me put a mark here. So we have covered these three for now. Okay, now let's look at the other areas. Now let's look at the weekly pairs. That's easier to understand. GDXW, which is the Gold Miners Fund, RDT, which is the Russell 2000 weekly pair, and YETH, which is the Ethereum weekly pair. So I'm going to hide these sectoral funds just for the moment and just look at these three. Let me hide these as well. And then let's look at the Yeah, let's keep it that way. INT is interest, so let's leave that for now. Leave it as is. Now, if you look at here, GDXW, I didn't receive any payment in the initial week of July. So these dates are actually chronological. Like it starts from July 2nd and it goes up to July 31st. So, you can understand that in a sequential order. I will zoom it actually. I just realized that you're not able to see this side. I'm sorry about that. Too late, but I've just realized that you're not able to watch that portion. Okay, since I started, investing in GDXW probably in the second week of July or later, so you don't have any payouts in the initial part of July. So July 14, 21, and 28, you have the payouts, and it's been decent, steady, like not big amount but steady. And totally, I have about 6.87, around $7. And now when I look at the RDT, the performance has been, fantastic. Like I started with $12 something in July 2nd, and July 10th again similar amount, 12.32. 17th it went down like 9.72, and on 24th again it jumped to 11.06, and July 31st it was 13.26. Total about 58.56. The good news is that last month I had made only 42.58, so it's a good increase. Like, so it's a decent amount of increase from the previous month. Of course, these calculations are not correct, so I will fix that later. But when I look at the performance, I can clearly see a decent jump. Like, so I'm not targeting any specific amount, but if I see a decent growth every month, that's exactly what I want, and I'll diversify and spread it out. Now, when you look at the Ethereum side, it is kind of similar. Like you can see, initial payment on July 2nd, 9.48, and then on 9th, $8.88, and then 7.31, and then 6.3 on July 23rd, and then July 30, 6.62. One thing that is concerning me about YETH is the Ethereum prices are highly volatile. The second problem is that is dragging down not only the price of the YETH, it's also dragging down the distribution with YETH. So that's the concern that I have. Now, let's look at the overall performance now. Okay, let me open all these columns. Um, but I'm not going to go into these columns right now. I'm going to go into the summary table on the right side. On the right side, you can see all the tickers total income for the month of July. So I have here CMCL at $6.96, HHIS 11.88, SDAY $5.55, RDT 58.56. RDT has been the top champion now, and YETH $38.32, which is second in line, and GDXW 6.87. Pretty good because this is a new one, very recently added, small quantity, still great performance. S&P sector, this is what I need to explain to you. So you see these five, different tickers starting from XLBI. I'm going to hide these columns so you can just see only the sector ETFs. So let me explain what each one stands for, then you can understand the numbers better. Okay, so XLBI is the materials S&P 500 materials ETF, and XLBI because it is a S&P sector premium ETF, and this is the communication services from S&P 500, and this is the S&P 500 energy with covered calls. This is S&P 500 utilities with covered calls. So all these are S&P 500 sectoral ETF with covered calls, and these pay monthly distributions. So you see the distribution coming on the 6th of July. So every month the distribution dates would be same for all these ETFs because these are all managed by the State Street Fund, which manages all these funds. So obviously the distribution dates are going to be similar, payout dates are similar. Okay, the I won't compare these dividend amounts with each other because the quantity held is different from, for example, materials I hold a small quantity, And whereas if you look at energy, I hold a larger quantity. So obviously it is proportionate to the quantity I hold. And yeah, so that's what you have so far. And in terms of the sectoral performance, like these funds have given about, total of 4886. That is the amount of income that I have from these funds, S&P sector funds. So yeah, so there you have it. This is the performance of these funds so far for this month. Uh, so overall, I would say that RDT has been a champion. Ethereum has also been good, and S&P sector funds have been doing pretty well. Uh, the other funds which are small, it doesn't mean they are not doing good. Good. I would say SD and CMCL are doing pretty well actually, even though their dividends are small. And I've increased the quantity of these two in July. So you will see a big, some kind of bigger jump in August, when I do the August video. And hopefully, if I have a good response, I'm going to do an August video. HHIS is not satisfactory. I'm just holding it for income. I'm not sure what I'll do with that. I will have to review and make a decision. Uh, all these weekly ones, I'm so far happy, except that Ethereum, I have some concerns. And yeah, this interest is also going to increase because have taken some exposure to the leverage and extra margin. So that's going to change over time. Okay, let me take a quick glance once again to see if I have missed something or if I want to add any points here. So overall, if I look at this whole, performance, I see that. See, one thing I see here is if I highlight all these dates, I have around 15, a count of 15, like 15 days. I received some kind of distribution on 15 days in the month of July. So out of 31 days, I've been receiving distributions on 15 different dates. I mean, 15 unique or different dates, which means that every other day I'm receiving some kind of distribution. If I, ignore the weekends and all that, on weekdays, I'm been receiving distributions every other day, roughly, you know, 1 out of 2 days. So that's pretty good amount of, dividend flows, and that is going to improve my cash flows and improve my ability to invest more in the long run. Because if I have to invest on a regular basis and I have to put in some capital on a regular basis to achieve dollar cost averaging or reinvest and grow my fund, this is a great strategy for me to achieve that. And these sectoral ETFs are also helping me to do that, but they are going to help me once in a month. But these weekly pairs from Roundhill, GDXW, RDTE, and YETH, they're going to help me, you know, get that cash flow every week. And similarly, CMCL and SD are going to help me every 2 weeks. So that way I have sufficient amount of cash flows for deployment into the Canadian side, because I'm going to receive Canadian dollars for CMCL and SD. For the others, I'm going to get it in the USD currency. So, so that there you have it. That's the whole portfolio for you. And just to quickly give you a summary on this table on the right side, in total in July I made about $22.56 in Canadian dollars and 152.61 US dollars. So I've just marked it separately because each one is under a different currency bucket. So I have a different total for them. On the Canadian side, the income is not that much. Like it's a very small number. On the US side, the income is pretty large. $152 a month is not too small. The reason I choose this month to do the video is because I wanted to make sure I hit the $100 mark in either of them. In the US market, I hit the $100 mark because of the weekly payouts that are coming in, and I hope that probably in the next 1 or 2 months, I will be hitting the $100 mark in the Canadian side too. And yeah, so that's the whole point of this video. So this is my portfolio for the month of July. And just to give you a quick summary, uh, this portfolio is purely meant for income plus growth. So a combination of moderate to high income plus moderate to high growth. and different funds will have different permutations and combinations, and that will help me achieve not only higher amount of income but also higher amount of growth, which helps me build wealth. I hope you like this video, which was in a different format, and also my portfolio overview. If you have any questions, comments, or any other thoughts or ideas, please drop them in the comment section below. Looking forward to hear from you. Thank you. Have a great day. Happy investing.